So this is investing for beginners. This is what we'll be learning today, which is the agenda. So today we'll look at the cash flow quadrant. Then from there we'll go into how investing works. And then we'll talk about investing in stocks. We'll talk about how to buy stock, strategies to buy stock, the risks of investing, and how to manage the risks, where to buy, and key things to do before we invest. Are we following here? Hello? We following. I do invest in stock, crypto, and business, and I have the business of my own, and I'm co-founder as well. I do have a background in marketing and studied MBA General Management from Coventry University. Did some good courses, including finance. I got into stock just because of my dad. So I remember the first day he bought my first stock for me. That was in, I think, about 2005. Then the day he bought my stock for me, I was broke. Like, I was in school, Unical. He just called me to First Bank, no, Intercontinental Bank, Maurice Lazo. He just called me, and I didn't know what he was calling me for. When I got there, he just gave me 33,000 and said, pay it to that guy. When I paid, he said, that's your first stock. And it was the first bank share. So I think I bought 1,000 units of that back then. But I didn't even know the benefit of it then. I was not really doing anything about investing then. So what happened is later on during my service here, I started investing, bought Fidelity, bought some other stock like that, then traveled, and then was just mute until I started doing research during the pandemic and saw that you cannot really buy stock using the broker like we do here in Nigeria, because we do have a family broker in Nigeria that used to handle my dad's stock, my sister's, and mine. But in Ireland, you need about 250 grand before they even look at you to start. So I was like, how do I get in? So I started doing research myself and then found how to start buying stocks. So I started investing again. Since I started, I just decided that there's so many people in the dark that can actually make money and grow wealth. So I just decided to start talking to people and reaching out to people. So one of the best way I decided to reach out to people was to make videos about investing. So I started doing YouTube videos, reach out to people in my community and all those stuff. And that's where I am right now. And I'm happy doing it with you guys. So I don't know if anyone know the cash flow quadrant. Who is aware of it? Anyone?
I don't know.
Okay. And that's why we're here anyway. So
Me, I know Sabio.
So this is a cash flow quadrant by Robert Kiyosaki. When it comes to money management, personal finance, and everything, he has so many strategies. So this is one of his major strategies. I said I should start with this and let you guys know what's really going on here. The cash flow quadrant says that there are 4 ways we make money. One of the way is you being an employee, which is E. So as an employee, you have to work, wake up in the morning, go to work, make money at the end of the month or the end of the week, you get paid. So you work for money. Technically, if you don't work, money won't come. And the harder you work, the more money you make. That's the way the system is. Most of us, this is what the school taught us to be. We are positioned to be an employee. As an employee, you are being programmed to work. Finish school, go get a good job, and you'll always remain working for money for the rest of your life. At the end of the day, when you retire, they give you pension. Now, the S stands for self-employed. As a self-employed, the difference between you and an employee is the fact that you're your own boss, so you can wake up anytime. You can do things anytime. You're not taking orders. There's no much pressure on you. However, if you find that the self-employed man, despite him being a boss, he still trades his time for work. So if he does not work, money won't come in. Do you get? He has similarities of an employee. It's just that he's not taking orders from anyone. He's still going out to work. If he does not work, money won't come in. If he falls sick today, money won't come in. By the way, S also includes small businesses, not just self-employed. So American system addresses that small businesses are like organizations with 500 and below staff. That's what the American system is. So that's what we'll use based on small businesses. Most of them fall into this category. If you look at the side there, like I said, they are their own boss, wants to run the show, but they invest their time to make money. Now, this is the quadrant most of us actually fall in. If you look at this other side, you'll find that you have the big businesses, the likes of Amazon, McDonald's, Tommy Hilfiger, and the rest. So if you watch these guys here, they mainly use people to make money. People work for them. So they control the system. Even if they go to the beach right now to chill, people will work and give them money. This is where most of the top dog, the big boys, this is where they find themselves. Now, the difference between these guys here, the B and the S, is that this guy is own a boutique in Yaba, whereas this guy is Tommy Hilfiger. You get? So that's different. They are both business people, but these guys are big-time players in the industry. The Amazon, the Facebook, and the likes. Now, this is an investor. This guy sits down, he invests in businesses, he gets the best people out there to actually do the job for themselves and everything. And he just invests and uses money to work for him. Now, the big players here are also part of this team. This is where the rich people are actually seated. Now, the question is, how do we get from this side to this side? Is there anyone that can actually tell us?
Investments.
Sorry?
Investments.
100% correct. Investments. Because this part, the B part, is very hard for you to break in. It's difficult to break in. You need so much money, so many people coming in. Whereas with our little money we are earning from this part, we can start investing to make more money for ourselves. So this is the only way we can easily break into where we can make money, which is through investing in stock, crypto, real estate, or businesses. Because with that, your money will start working for yourself. So that's why I said I should start with this quadrant for us to actually have an idea what investing is all about. How investing works, easy peasy. You plant your money. So this is you planting your money in the hope that at the end of the day, they let your money grow. This is you buying asset with your money, and this asset will then transform into more money for yourself in the future. And when we're talking about assets, to name a few here, we have here the stock market, we have cryptocurrency, we have real estate, we have government bonds, we have commodities like gold, silver, and the rest. And then we also have businesses. You're investing in businesses. You could be an angel investor. This is all about investing. So now we'll talk about investing in stocks. Investing in stocks simply means you buying a piece of an organization. That means you own part of the organization. Irrespective of how big the organization is, you own part. And you don't have to get your hands dirty. The organization will do the work for yourself. All they need to do is that they take your money, invest it in their business, become billionaires. However, their business will be working for you. And at the end of the day, they give you return, cash value, either in compound interest or in dividends. Stock is the only asset that will give you compound interest. Are we familiar with compound interest? I know we have Namika here, Buya, and the rest. Jude, you are in the bank as well. And I think Ikena is here. We all know what compound interest is, right?
I've mentioned it more than
I think
I'll take that for a yes.
idea now, but I think I know.
Yep. So I'll just explain compound interest. I know Ikbo knows it, but I'll just explain compound interest here. So compound interest is, you see, one thing about stock is when you invest your money in stock, yeah, let's say you put $100 today, and at the end of the year it gives you 10%. So the 10%, your money becomes 110 at the end of the year, right? The following year, what happens is that your money, if you make another 10%, is not just on the principal, which is the 100. You make 10% on the principal, which is the 100, and you also make 10% on the 10% you earned the previous year. Do you understand? If you make, so now it's not going to be 110 to 111. It's going to be the 10% will yield interest, and also your €100 will yield interest. So that's how it compounds. Do you understand? Do you follow? Hello?
Yep.
Good.
Yeah, we understand.
We'll follow you, man.
Fantastic, yeah. So, and also the fact that it gives you an avenue to earn passive income. Now, passive income is you earn that through dividends. So if there are different kind of stock. There are stock where you invest to grow your money, and there are stock where, despite growing your money, they also give you a piece of the pie, which is the fact that we've made profit. the money is too much for us to use. We want to share to our shareholders, and then you get money. Like my dividend stocks that I have in my portfolio. I have Microsoft, I have Apple, and I also have an organization in Ireland called BLOOMBERG. I think I have another one, CRH. That's a construction organization in Ireland as well. So those guys that pay dividend. Whereas when we're talking about growth, we're looking at the likes of Facebook. Facebook do not pay dividend. The first time I bought Facebook was actually $250, and then September last year, Facebook went as high as 384. So that's my money growing. Although they don't pay dividend, but I can see my money growing. Now, how to buy stock? When I was explaining about myself, I talked about broker. It's common in Nigeria that people use broker because they don't have time or they don't have the knowledge of how it is. So they walk to a broker, and then these guys, they sit down and they plan your money and tell you organizations to invest in. So that's the job of a broker, and then you get to pay them part of your money. However, these days, it's now popular and really big that people are doing it themselves, and there is nothing too serious about doing it yourself. Once you have the app in your pocket, you can actually do it yourself. We have the likes of Robinhood, we have the likes of Webull, Interactive Broker, giving us a pathway to start investing in the stock market without going to see these guys in Wall Street that will not want to deal with yourself and will want to deal with only the rich. So these are strategies to pick stock in case you want to get into the stock market. The first thing I tell people is invest in what you know, the things you use mainly. If you see Warren Buffett till date, he won't invest in technology firm. So he will tell you that he prefers Coca-Cola, he prefers General Electric. They get the things he knows. Like myself, the very first share I actually bought off when I was using this retail broker is Glambia. That Glambia, the milk we drink, they make that milk. And it's as in, if you go to the shops, it's always gone. Anytime you go there, if you go late, it's not there before they did. So I found out that, okay, they're not far from where I live. Like if you see their building, their structure, the investment they're making in different areas in the country. So I was like, okay, this is one organization I know. Secondly, I use Facebook a lot. I use Facebook for my business, to promote my business. I use Facebook, I use Instagram, WhatsApp. I was looking at Facebook. If I spend my time on Facebook, and Facebook is the biggest organization when it comes to, second to Google, but when it comes to social media, they're the biggest when it comes to advertising. Why shouldn't I invest in Facebook? Because I know the business is a business that will succeed. Same thing with Microsoft. We use Microsoft every day. Even without knowing it, as soon as you set up your laptop, your system is running on Windows. Microsoft owns that. You use Microsoft Word, you use Excel, they have a cloud system where they store stuff. They have the Xbox, they have LinkedIn. You see, Microsoft owns so many businesses that you use every day. So that's the way I see it. Whatever you use, even the clothes you wear. If you're a fan of Nike and you wear Nike to the gym every time, you can invest in the organization because you know it's a winning business. So that's how to actually pick stock around you. Then the next one is look at what's trending. We're talking now, the major talk right now when it comes to cars is electric vehicles, EVs. That's what's trending right now. It used to be social media. Now the next one that is going to come online will be the metaverse because of Facebook. But if you look at what's trending, it's easy for you to get in there and look at that market to invest in, because once it's trending, it's going to take a while before it falls up. Look at Tesla. Tesla is a massive stock, and government are actually looking for a way to see how they can phase out diesel and petrol cars for EV vehicles. So that's one thing you can actually look in before you pick your stocks. Also, you look for disruption. You look for, when I say disruption, things that are coming in to cause problem in the market space. They get just like what Netflix did. Everybody was on cable TV until Netflix came in. If you look at that market right now, it's so competitive. You have the like of Disney Plus in that market. You have Amazon Prime now. There's so many in that space. You can also look at complementary products. Complementary products are products that go in line with other products. Like electric vehicles, for example, they need semiconductors to function. Your laptop also needs semiconductors to function. People like Intel, they produce the chip. So these are like big organizations that they rely on. There's a company I invested in called Blink Charging. Blink Charging, they'll be like gas station for EV vehicles by the time EV is accepted globally. Blink Charging, they provide stations where people can actually charge vehicles, their electric vehicle. Do you understand? So that's one thing about complementary. Then you can also buy competition. You look at market share. Tesla is expensive right now for people to invest in. Now you look at what's the next big thing in that EV space, because obviously Tesla cannot service everyone. So you have the likes of Lucid Motors, you have the likes of NIO. You can decide, okay, Tesla is too expensive. They're the market leader. I can go into Lucid. Once, if Tesla is 100, Lucid will be 20. And if Tesla gets to 500, Lucid can easily get to 100. That's how you grow your money there. And then you can also watch financial news like CNBC and Bloomberg. They give you an idea. So this is how I started myself. And it's actually the best way for you to know stocks to pick. And if you want to go in details now, you can actually then look at the quantitative analysis of this organization. So when you understand this stock, after you've decided that you want to pick, you can then say, okay, I've looked at Tesla, for example. How are they making their money? What is their revenue? You can then look at their revenue coming in, if they are making money. Then you look at the competition. What's their market share? Like you look at, like I mentioned, NIO, I mentioned Lucid. Then you look at the market share. What's the market share? Can they still grow, or will the competition steal market share from them? So these are things you actually look at. Then you look at the PE.
Let me ask you a question.
Yeah, go ahead.
Sorry to cut you back.
No worries. That's why we're here now.
When you talk about market share, right?
Yeah.
How do you estimate that? Because some of these companies you call in, like Lucid, and they're not like Tesla is playing in the US, for instance. Yep. I don't think Lucid is playing in the US. So how do you quantify the market share for a company?
Most of this stuff is in their book at the end of the year. They let you know what their sales is like, so you can actually match these organizations when you're looking at them. You see, Tesla is, you said something about the US. Lucid is also in the US. However, their main production line is in China. Like right now, Tesla is the big player when it comes to the EV market, right? So looking at how many they ship, how many products they ship, are they meeting target, all this stuff. And then you can look at small players that are even coming in, and you will know that it's easy for you to actually pick them out. Even by the time you look at financials of Tesla, NIO, and Lucid, you can see how many vehicles these guys are shipping, how many vehicles these guys are shipping, and how many vehicles these guys are shipping. In the phone industry, it used to be the market, when it comes to shipping of phones out, Samsung sell more phones than iPhone. Yeah, so they used to have like a big pie of the market. It used to, in the past, it used to be Nokia, yeah, but until Nokia fell off, then Samsung came in, dominate. However, iPhone has a very good share of the market, a massive one, and iPhone is more expensive than the Samsung phones even. So iPhone is regarded as, before Microsoft kicked them off, they were the most valuable organization in the world based on their pricing, their strategy, and the advancement of their product. Whereas Samsung, they're selling more of quantity because they're not just looking at the up market, they're looking for everybody. So they have phone like A series, S series, and all these things. So they can ship lots of product out. So these are things that you can actually put together, and you can pick out the market share of the organization. Is that okay?
Okay. Let's keep going. Yeah.
So you look at PE ratio, which is the value, the price per share on that day versus earning per share. given the debt to equity, like their debt, and you also look at their financial statement, which you look out for their short-term and long-term assets and liability. Also, the management of the organization matters as well. Who is leading, who is spearheading the organization? Do you get? If that person is, if you look at the technology sector, for example, you'll find out that most of the founders are there. It's until recent that you start seeing that some of them will pull out, like Steve Jobs. When Apple started, Steve Jobs was there. Before his death, when he left Apple, it crashed a bit. So they had to bring him back. Do you get? So people look at who is spearheading the organization. That's why Mark Zuckerberg would not want to leave. Jack Dorsey just left Twitter. And even the shareholders were happy that he left, because it's just like he knows the technology of the organization, but he doesn't know how to make them money. So Twitter, everybody thought Twitter was going to bring so much money, but look at where Facebook is and look at where Twitter is. Twitter is actually selling below $50 per share. And shareholders are not happy with that. So even when he left, they're hoping that the new guy will drive the organization forward. Same thing with Jeff Bezos. When he left, before then, people relied on him. And when he was leaving, the guy he brought in has been in the organization as well doing. So people knew him. Like, he's not like a strange face coming in. Those are things that you look out for. Who is running the organization? Who is running the show? This is when you want to do the quantitative analysis. Now, I know this part is tough for everyone. Like, most people, like when I started, I wasn't even really using this. I had to use an app, which I will share the link with yourself. It's called Simply Wall Street. They do all this, whatever organization you have in the world. Once you put the name of the organization, it will analyze it for you using all these things I've just mentioned here. And you then decide if you want to invest in the organization and all that. They'll do the job for yourself. At the end of this stuff, I'll show you how that app works. Risks you invest in, and just like every other investment, even real estate, there are risks in every form of investing. The major risk is you losing money. And how do you lose this money? One is politics. So some political decisions can be made, and these political decisions could be terrible. They could come that they want to tax the rich guys, and once they say that, it starts affecting the stock market. It could be trade war, all this kind of stuff between China and the US. Then it could be economical factors like inflation. Although the stock market is a good way to beat inflation. However, inflation still affects the stock market. Same thing with interest rates. So things like that do affect the stock market, which is the risk there. Then you can have like environmental factors like the pandemic right now. As soon as the pandemic did hit, a whole lot of organizations that were doing good suffered because businesses were no longer going. Government were making decisions to like lock the economy, shut down economy and all this stuff. So it does affect the stock market, and sometimes it gives you a good position to buy into the stock market. Then business decisions. This is a major player as well too that affects the stock market. Like for example, when you talk about Facebook or use Facebook, is it when Facebook got to 384 height? I was like saying, wow, by the end of the year we'll get to like 400 plus, and then all of a sudden it started falling back down because of a whistleblower. The whistleblower issue. As soon as she came out and said everything about Facebook, it started calming down. Then Facebook changed its name to Meta at that point in time. People did not see that as a good PR. They thought, okay, he's just trying to like avoid what's really going on. So things like this kind of decision. Also, he had court cases at that time. Like they always take Facebook to court just because they feel the organization is too powerful, and they're trying to like break down Facebook because he's just too powerful. They're trying to see how Facebook can separate itself from Instagram and WhatsApp. Same thing happened with Microsoft. When Microsoft talked about price increase on their software, their stock price went up and then became the most valuable organization. Another decision that is affecting Facebook is when Apple came in and said that Facebook should no longer track Apple users. It's a big word up to date. Like if you have an iPhone and as soon as you set up your iPhone, you see Apple will give you a signal that Facebook is tracking you. Do you want to opt in or opt out? So a lot of people are opting out and is affecting the accuracy of Facebook advertising because they don't have people's data when it comes to iOS and all this stuff. So Facebook actually fought with Apple that time. Cook and Mark Zuckerberg were going word for word and everything. Until date, they're still at it because they've not resolved it, and Apple is not doing anything to help Facebook when it comes to their product. So those are things that can actually affect your investment. However, there are ways you can actually manage these risks, and these are the ways you can actually manage them. One is for you to diversify your investment. I don't just talk about diversifying your stock investment. The way I manage my portfolio, I diversify in different areas. For example, I have the US market, I have the Irish market as well. So if the US market is doing bad, I know that the stock I have in the Irish market will protect my money. So I won't really feel the impact of me losing money. You know what I mean? Until the US market comes back to normal. So I diversify that way. And I don't just invest in the stock market. You can also diversify by having other assets like the crypto market. So if the stock market is doing bad, sometimes crypto will be doing good. And I also invest in businesses as well. So there's some business I have an investment here in Nigeria that other people are running, just like an angel investor. So even if these two, they are doing bad, I have one here that could be giving me profit. So that's the way I see diversification. So you can diversify your portfolio, your assets, and your investment for you to protect yourself from losses, rather than put all your money in a particular organization or put all your money in a particular country. Now, to be honest with you, those that take the greater risks, they make more money. They, like the mightier the risks, the mightier the reward. I've seen somebody, all his portfolio, he sold all his assets and kept all his money on Tesla. He just went in and bet on Tesla. And then Tesla was, I think, 400. Now Tesla is over $1,200. And as at then, he had only 150 shares of Tesla. Now it's working for him here, but if anything happens to Tesla, that same guy will go broke. It's just like in crypto where a guy turned a millionaire overnight because he invested on Doge. He put all his savings. He said he put 150 grand on Dogecoin. Like, he took that risk, but I'm not mad. Like, why will I invest in Dogecoin that have no meaning? You just put all your money on Dogecoin, and then as soon as he boom, the guy became a millionaire. Things like that work good. However, for ourselves that we are managing our small money, we are not rushing it. We are just taking it bit by bit. So it's best for you to diversify to manage your risks. Now, second, you need to think long term. If you think it's a get rich quick scheme, then you're not willing to get into the stock market because sometimes the market can be bearish. But when you leave it long term, that's when you see the potential of making money. Also, there are some people that do day trade. Now, day trade, yes, you can make money. But for you to make reasonable money with day trading, you have to invest good amount of money. Like, the people that day trade will tell you that just 2% increase will give you so much, which is true. But 2% of 1,000 is not money for you to risk 1,000. Do you get? But when you have the likes of 100,000 and you're risking 100,000 for 2%, the return is good. That's the beauty about day trading. Day trading, well, if you leave your money long term, you'll find out that it goes down, it comes back up. It goes down, it comes back up. And it brings me to the third one, which is dollar cost averaging, because by the time it goes up, you wait for it. When it comes down, you buy more. Then you average your cost of buying. Then it goes up again, it comes down. Over time, you'll find out that your money is there. Like, for example, look at Facebook. Like I said, I got Facebook when it was $250 when I started. And today, Facebook is, like I said, they got up to $384 before it pulled back. I have 20 Facebook shares. Yeah, I did not start with the whole 20. I bought 5 at first, and then from there I bought 2, added another 3. I just kept doing it when they like that and kept building. The same thing with Microsoft, the same thing with Apple. That's how you dollar cost average. At the end of the day, you find it, because this is a long-term play for yourself, they'll now give you the average of all the shares you bought. So you could buy some when it was high, you could buy some when it was low, and all those stuff. At the end of the day, it's just consistency. It helps you with consistency. And another way to manage is that you should hold cash. Emergency fund is always necessary, because if you put all your money in the stock market, when you need money, it may be a time where the market is down and then you won't like it. So it's good for you to have some of your assets in cash form, in liquid cash, because it does help you to handle stuff that are needed urgently. Now, this is where to buy stock. If you're in the United States, there are so many there. We have Weibo, Robinhood. These are the major players when it comes to retail brokers, but you have the likes of Interactive Broker as well. It's not there. In the UK and EU, you have eToro Trading 212. I use the Gyro myself because they're very cheap, plus 500. In Nigeria, you have the likes of Bamboo Invest and Trove. Now, these guys give you access to American stock market, also give you access to the Chinese stock market, depending on what you have. And you also have access to the Nigerian stock market, the likes of Dangote, Nigerian breweries, and the likes. So these guys are there as well to help you with that. And key things we should do. Are we following before I talk about this? Hello?
We're following.
Fantastic. Yeah, just making sure.
I wanted to ask a question, but I don't know whether I'm asking too many questions.
Don't worry, we have question time now. Just don't worry. Your question could help anyone, even me. So key things we need to do before investing is, if you have any debt, this is a major thing. It's best for you to actually go debt free. Now, when I'm talking about debt, is non-beneficial ones, because we in America or in the US, or sorry, in the UK or the EU, you know, is mortgage that they sell to you. You cannot just stand up and start building your house. It's mortgage. That's a good debt, so you can still have that and invest in the market. But if you have like bank loan or credit card or overdraft, or it's best for you to actually clear this debt before you start investing, because you don't want to be investing, especially when you have credit card debt. Some of these credit cards are like 17%. They are eating you off. Why you invest money somewhere when you can clear that debt and then be debt free? So it's best for you to actually clear your debt. Also, you need to have emergency fund. I talked about it previously. The emergency fund is in case something happens. At least you have 3 to 6 months. And even if the stock market is not doing good, within 6 months, it will come back to where you can actually sell and make money, rather than you sell immediately, if you get what I mean. So that's one other thing you can actually do. Then you need to have a plan. Are you going in for 5 years? Are you going in for 10 years? Or how long are you going in for? That's one other thing you can actually do. And then you need to research on the brokerage you're using. If you're in the UK, for example, do you want to use the Gyro or do you want to use eToro? What's the best for you? How secured is your money and all the stuff? And then you can then go ahead and invest. So, any question of the day? Oh yeah, hit me. That's in Brother Shaggy's voice anyway.
Hello?
Hello?
Yeah.
Yeah, thank you.
If there's any question, I'm ready to take questions now.
Okay, let me ask you, right?
Okay.
So, when you invest using some of these platforms, you know, like you mentioned, like you said, you have 3 different platforms for the different investments, like the ones for US, UK, and then Nigeria, right?
Yeah.
Now, I know that when you're using stockbrokers, for instance, they give you the share certificates and all those kind of stuff, right?
Yep.
But when you use these platforms, they also give you something like the share certificate. Apart from you seeing your portfolio on an app,
Yep.
do you have any legal documents that show that you have those shares in those companies?
Yeah, you can request for them, and in the app you have a section where you have the financial statement, everything that you're actually doing. You can request for your certificate and they send it to yourself as well. So because they're just they're like a
Do you
broker.
request for the certificate? Do you request for the certificate on the app or
No, most of them have a contact. They have a phone contact. Like the gyro I'm using, for example, yeah. When I started using the gyro, they changed as soon as I started. You write some tests for them to understand that you know about the stock market before you get in. This is based on EU law, and there's a clause that they cannot hold your money. So initially, I will put money in their platform, and then they created a bank account for myself, and that bank account is, because it's a German company anyway, it's in Germany there. So all funds I'm transferring to, it goes to my German bank account before I can invest, because there's a law that they cannot hold money. And they have a phone number. They operate as a business proper. It's just that they give you an avenue where you can actually walk in and do it yourself. When you use these guys here, you can request for the certificate and they will give it to yourself. You see, the good news about investing in the stock market is there's control, not just for the organization itself, but even the brokers. They are being controlled by the SEC. They get the commission itself, and if they don't give you your certificate, that means they're a scam. And if you take them to court, they're in for big money. Do you get? So they won't mess up. You're buying your shares, so they know what they're doing. Their big business is going in. But that does not mean. That's why I said in the last, if you look at the last slide when I was talking about your managing your risk, or the things you need to research the one you're using. I know the popular one, like I'm not in the US, but the popular one that most people are using, even the celebrities, like I saw Jaru talking about Robinhood, like he uses Robinhood. Like when he was talking, he said, now we have the Wall Street in our pockets. That's what he said. They get. So the likes of Robinhood and the rest, they are so big. That's what everyone is using. And these guys are also listed. For them to be listed there, they'll do everything right. And they're in a country where there are laws. Now in Nigeria, I know these guys, Bamboo Invest and Trove. They said they have an organization in the US that provides insurance for money and links them into the SEC. They do have an office somewhere in Lekki or the VI somewhere there. They have an office there. I've listened to our interview. But if anyone is going to use any of these guys, it's good for you to do your due diligence, do your research. Don't just take it. I don't work for these guys, so I won't come out and say these guys are 100% perfect. Do you get? I don't work for them. I will just only give you where you can buy from, what to use. But it's up to you. If you know you really want to go into it, just spend 10 to 15 minutes every day researching on this platform and then pick the one that is best for yourself. The good news about Trove is, you see, Trove, for those in Nigeria, if you use Trove, they give you the ability where you can actually buy in bits. They get. So you, like right now, the one I use, the gyro, if I have to buy Microsoft, I have to buy a whole share, which is about 300 plus. But if I need to buy, if I use Trove now, for example, in Nigeria, instead of me spending $300, I can buy $10 worth of Microsoft, because they give you the ability where you can break your investment and just buy a piece of a whole rather than buying a whole. You get? That's what Trove does. Bamboo Invest, I don't think they offer that service. So you just need to do your research. That's why I gave different brokers there, so you can see and have options. I'm not just telling you to use this or use this, use this. They're not paying me, so I can't say that. Is that okay, Chisom?
Yeah, that's very fine. That's okay. That's fine.
Brilliant. Is there any other question from anyone?
Hello?
Hello?
Yes, when you left, we're just laughing at, I was saying at least you somehow have an idea on some of these things. Then you mentioned UCD, what else did you mention again? What was it?
CNBC.
So after that, when that kind of thing they begin last me. It's not my fault. I only watch the GST, what concerns me. And even with the premium package I don't even know what's so now, I want to ask you, how do we now know, or how do we know when the shares are available to be bought by, like this Microsoft shares or stocks, and maybe Facebook? How can one get to buy them who really want to buy?
So like the stock market is open Monday to Friday, except when there's a bank holiday, which is like public holiday here in Nigeria. If there's a bank holiday, then the stock market will be closed, like important holidays. But Monday to Friday, as it is, it's only crypto that sells 24 hours. Like crypto don't have a closing time. You can buy anytime. But the stock market, Monday to Friday, and they operate like every other business, 9 to 5 kind of way. Like in Ireland, it opens at 8 o'clock and it closes at about 4, 5, thereabout. In the US, I know from my time, the market opens it opens by 1:30 every day in Ireland. So if I have to buy from Ireland the US stock, I wait till 1:30. That's when their market opens, and it closes at 9 p.m. Irish time, which is the London time, the UK time. So it depends. Like the Nigerian market obviously will open 8 o'clock, 9 o'clock, which is your working hours, and finish at 5 o'clock. So, and if you want to buy US shares, I'm going to buy on Monday, you should know what is the time difference between the US and your time, and then you can buy at that time using the app. It's not like there's nothing stopping you if you're doing it yourself. You can buy anytime. The stock is always there for you to invest in. It's not like they have a limit. There's always an opportunity for you to buy. And CNBC, I think CNBC is on DSTV as well, which is the news side. If you go to where the news stations are, where you have your CNN, your Sky News, and the rest, you should have CNBC there. If it's not there, you have Bloomberg. So these are like news outlet that tells you what is really going on in the financial market. Yeah, Blessing, you can go ahead.
Okay, thank you so much. This is an eye-opener. The presentation is really very insightful. But just like Ruth asked the question, I want to take it from a layman's point of view. You have done this thing like you're now like a guru, sort of. So you're saying it like from that level. I wanted to just take it down like, this is someone who doesn't really know much about this. Okay, I'm in Nigeria, for instance, and I want to invest in maybe a company outside Nigeria. Like, how do I go from point A to point B? Well, I think it would really appreciate you like taking it at that level,
Okay. Now, before I answer, I am not a guru. I'm still learning. Do you get? I started doing this, like I said at the start. I started doing it during the pandemic myself, and I started teaching myself. To be honest with you, there are a couple of investments I've done and did not go the way I wanted it because I was in the learning process. But I tell people every day that I don't count it as a loss. Instead, I count it as school fees. It's not something I learned in school. Do you get? I was doing it myself. So if you've not paid school fees and no one is training you, you're training yourself. You're doing it. I'll just see one or two things. I'll just say, let me go for this. I'll research a bit and it won't go that way. But I learned that way. And because I've learned a bit, I can tell someone that don't go this way because I'm using my experience to advise people. I'm not like you. I'm still learning. There are people that are mad into it for over 15 years, 20 years. Like I have a full-time job as well. So I have a full-time job. I have a business I run. So I don't even have time to soak myself inside. Like I said, I was going to show you guys an app I also use. But what I'm saying is it's easy. You just have to go in and learn. That's why the first thing I always tell people, if you want to invest in the things you know, things that will not fail you. Do you get? Like some of those stocks I had 1 or 2 losses there. There are stocks that I decided to try you understand, you want to take more risks and then try to make extra guy. Okay, let me risk this one, and then you find out that it's not working out the way that they want. My best stocks are the ones that I know. To be honest, my Facebook, my Microsoft, Apple, Glambia, those stocks are giving me mad profit. But the ones I decided to take a punt on, like, okay, let me try this risk. Let me just invest this extra cash I have. Some of them, it could be like 500 euro. I'll just throw it there. Let me just see if it's going to ×2 or if it's going to ×3. Sometimes I find out that after I put the 500, it start going down. You understand? So that's it there. But like I said, the platform there, which is the Bamboo Invest, you can use that to buy. This presentation is being recorded. I will upload it, so you can always refer to it as a guide if you want to get into it and see, okay, this is what I should do. And you can always call me up. Like, I also have a YouTube channel that I talk about stock investing and all this stuff. You can subscribe to the channel, and when I release a video, I'll just talk about investing and all this personal finance and all this stuff. We can actually get 1 or 2 things that will help you going forward as well. Is that okay, Blessing?
Shukran, thank you.
Fantastic. Namika, over to you.
Yes, I have a quick question for you. I know as part of I know most of these brokers, their services are not free, right?
Yeah.
So without too much investment, research and things, can you just give us an average cost of using any of these services or platforms for
No, Robinhood is the fees for Robinhood and Webull is very, very low. Like myself, the platform I use is DeGiro because I'm in Ireland. Yeah, the platform I use is DeGiro. Buying American share is free for me. It used to be 59 cents as a commission. It used to be 50 cents as a commission, but now they give American stock for free. And then for Irish stock, if I'm buying Irish stock, I pay as high as €2 for the transaction, not per share, the transaction itself.
Okay.
You get, so you could buy 10, 20, 30 shares, 40 shares, and you only pay €2. 50 shares, 100 shares, only €2. But in America, it's free. I don't pay for buying American shares. Now, with yourself, like for those of you in America, there are so many things you can actually do that is beneficial. If you want to play it safe, like we are locked out. I didn't even mention it in this presentation. There is what they call ETFs. Exchange Traded Fund is a tracker. Yeah. ETF will allow you to, I think I'm doing a video that will come out this week. Yeah, I talk more about ETF. But ETF, the Exchange Traded Tracker, is a group of companies being put together. Yeah. So like the S&P 500, you have the likes of Apple, Facebook, Amazon, all these companies put in one tracker. Now, if you invest in that tracker, they have an average return year in, year out between 8 to 10% of your money. Now, the good thing about ETF is that it's safe. It's safer than you investing in a particular organization, because when you have 500 organizations together in one tracker, if you put €1,000 into that tracker, that €1,000 is being distributed between these 500 organizations. So if 1 or 2 of them is doing really bad, the others will actually pull that one along. Do you get? It's like a team sport. That's why it's a tracker.
Okay.
So people invest in ETF. So you have the popular ones are S&P 500. You have that one. The ticker symbol is called SPY. You also have the Vanguard Russell, that is the VTW, and you have the Invest QQQ. You have ARK Investments. So these are like, there's another one called BlackRock. My organization use BlackRock. Like from pension, when you pay your pension and you do personal contribution, that personal contribution is being invested in the stock market on your behalf, and they invest it in a tracker. So the tracker my organization uses is BlackRock. You get. So these are things. Also, you can even contribute to your 401k as well. You know about the 401k stuff. You can contribute to that, and that helps you build wealth as well. So if you want a less risky approach, however, if you invest directly with an organization, you make more money. But just like I said, the riskier your investment, the mightier the reward. So if you invest in the likes of Microsoft, you get about, like last year, I had 65% return on my investment on Microsoft. Do you get? And if I invest in an S&P tracker, I'll get about 10 to 15%. Do you get? So that's the way it does work. So it depends on what you want.
Okay. All right. Awesome. Thank you so much.
You're welcome.
Mano, let me just ask a question, right?
Yep.
Is it easy to, let's say, when you want to sell, is it easy to convert back to cash?
Easy peasy. If I sell now, what happens is that the next moment it comes to cash, I'll just hit withdraw button and it goes straight to my bank account.
Okay.
Easy peasy, like no stress getting your money. However, one thing I need to mention as well is, especially we in the diaspora, that tax is a major thing. If you buy your stock, right? Let's say you buy in January this month, and you sell within 12 months. Let's say you sell in September, you're entitled to pay about 40% on tax. But if you wait till the following year, that 40% comes down to like 20%, which is capital gain tax.
Okay, so pretty much they're penalizing you for an early withdrawal after you invest.
Yeah, so that's one thing traders do not tell you about. Like those that trade, they get taxed heavily because despite the money you're making, you get taxed about 40%, 50% capital gain tax because you are doing it every day. You get, so as soon as you sell, you're entitled to pay tax, and that tax is heavy. So even like when I said you invest, you trade 1,000 euro for you to get like 2% of that 1,000. By the time you get that 2%, you're entitled to pay tax of 40% of that 2% you're making. Do you get? So at the end of the day, you find out that trading sometimes is not worth it. That's why you need to go long term. But when you go long term, you make more money by even reducing your tax payments.
Okay, last question from me.
Okay.
What's your perspective about crypto? Because you mentioned it as one of the...
I love crypto because crypto can make you rich in just a snap of a finger. You can become very rich. However, I hold less than 10% of my investment on crypto. Do you get? Because the way crypto, I'll talk about crypto subsequently in the future. I just didn't want this to drag so long. But you see, the way crypto does work, crypto is good. It's a virtual currency, it's a digital currency that can make you money overnight. Do you get? However, you see, even the big players coming in, they won't put more than 10% of their investment on crypto. I know people will shout Elon Musk has money in crypto. Yes, Elon Musk spent about 1.4 billion and it became news on Bitcoin. Everywhere like this guy invested 1.4 billion. Elon Musk is worth 250 billion and he only invested 1.4 billion. That is less than 1% of his money. But people are just looking at the sound of that money. Do you get? If he loses that, he won't break a sweat. You get? And it's the same thing with people like Jack Dorsey. They invest hundreds of millions, but these guys are worth billions. And if you follow them that way, you will lose money because the market is so crazy. You wake up in the morning and that market is down. Bitcoin right now is down. I think the last time I checked, let me see real quick. Because the market don't sleep. So Bitcoin, I think, was 38,000 euro when I checked this morning. So Bitcoin currently has just regained. It was 36,000 euro. Now it's 37,000. So this is the platform I use. I use Gemini to invest for my Bitcoin and everything. I have everything on my phone, and it's now 37,000. Ethereum was 3,500. It came down to 2,824. Like, I'm invested in this asset for long term, so I don't even bother about where the price is at the present state and everything, because I know it will come back up. Is there any other question? So if there's none again, then that means we are good to go, yeah?
Yes, from my own side, that's fine. Thank you so much.
Manu, you did very well. Thank you so much. Very, very enlightening.
Thank you, guys. Yeah. So that's it. Yeah, you can subscribe.
So much, Manu.
You guys should please subscribe to my channel, my YouTube channel, for more updates like this, and you can follow me on Instagram as well. That's the two places I talk about crypto, and on my WhatsApp as well. I talk about stock investing and personal finance. That's it.